Hello, everyone. I'm Arianna with the Home Investors team. Thank you all for participating in our webinar today to talk about how coronavirus has impacted the market. We have my colleague here, Ali. Say hi if you want to say hi. Ali Rashid, our RBC mortgage specialist.
Good morning.
And with NiaLaw as lead counsel.
Hi, everyone.
Yeah, thank you. Since we have limited time, we would like to give each person 10 minutes to explain various aspects of either mortgage, legal, and lastly, the real estate market. We can start off with Ali. Ali?
Thank you, Arianna, and thank you everybody at home for joining us today, taking the time out of your day. So given that we're limited on time, we're going to just get right into the meat of things. Firstly, we're going to speak with Ali Rashid, our mortgage specialist with RBC. Ali, the COVID pandemic has really impacted the market. There's a lot of people that are facing job shortages, and they're concerned with being able to pay their mortgage payments. With all of that that's transpired over the past 2 weeks, how are the banks responding to the COVID pandemic?
I just wanted to say good morning and thank you for everybody joining, and thank you for the great team that you guys are. Thanks to Mehran and Brian for setting this up. Things have been changing. It's a very difficult time for everybody, whether you're a small business client, you're a personal client, and we understand. And banks are here to help. They brought many different great programs to help our clients in every way that we can. In my field, the mortgage, we brought the payment deferral program up to a maximum of 6 months for now for our mortgage clients, and we're doing everything that we can in order to make things smoother for them and help them out during these difficult times.
Okay, so you did mention the deferral program. In addition to that, and we certainly do appreciate the banks rolling that out in the partnership, I guess, with the government. What other options are available in addition to the deferral program for consumers out there?
So for the deferral program, what it is basically clients can qualify to defer their mortgage payments for up to a maximum of 6 months. And this is a simple application that was sent through, and they can qualify that way. And by deferring your payment, when you submit your application, you basically don't have to pay your mortgage for that month. Now, this is a case-by-case for approval for every client, and we're hoping that everybody gets approved. But for the time being, we're just, the only thing that we can offer is the deferral program.
Right. Okay. So you did say that there's some qualifications that people need to meet. Can you elaborate on that and who you would recommend the deferral program to?
Of course, the first thing first is if your job has not been affected by COVID-19, or if you have enough backup savings that you can pay your monthly mortgage payments, do that, because by using the deferral program, you're just deferring your payments and the interest gets accumulated into your principal balance. But if you or your work has been affected by COVID-19, might as well submit the application and defer your payments. And people that can qualify, basically you need to have enough equity inside your mortgage in order for you to qualify. And if your mortgage is brand new, and if you have done it or done a refinance equity since January 2020, you would not qualify under this program. But people that have been paying their mortgage for the past year or so, they do qualify under this program. And by deferring this payments, you're not paying your monthly mortgage payments, you're just deferring it into the next month, and this interest on your mortgage gets accumulated to your principal balance. And the reason why clients that have been with us since January 2020, they do not qualify is because our systems does not allow our mortgages to go above the limit that you originally borrowed. And because you're so new to the bank, if you got a mortgage since January 2020, you do not have enough equity inside that mortgage in order to defer your payments.
Well, okay, so there's certainly a few qualifications that people need to meet. As I understand, there's about 200,000 applications submitted to the banks right now. It's safe to assume that some of those don't meet the qualifications and won't get their deferral approved. Now, that's very good insight. We appreciate that, Ali. If you can actually, for the viewers, provide some numbers, just high-level numbers to explain a little bit further, as you know, so they can relate it back to their own situation.
Of course. So, for example, let's say you got a mortgage 10 years ago, and your principal mortgage amount at that time was $2 million, and you've been paying your mortgage on a month-to-month basis, and your limit today, your mortgage balance is $1 million. And basically, if your interest rate is at 3%, you're paying on $1 million roughly about $30,000 annually in terms of interest. Now, if you divide that up by monthly, that's $2,500 per month. Now, when you waive your payment, let's say for April 1st, you waive your payment, what happens is your balance of $1 million mortgage on April 1st, it's $1 million. On May 1st, the $2,500 of interest gets added to it, and your balance as of May 1st is $1,02,500. And this will go on for every month that you waive your payment, defer your payment, excuse me. This will get added to your principal balance. And after 6 months, you will see your principal balance was much higher than what it was a few months ago.
Gotcha. Okay. Well, thank you for clarifying that. You know, I recently, just yesterday, I think they came out with some news that the overnight interest rate is dropping to 0.25%. Do you think the banks will follow suit with mortgage rates, or is it too soon to tell?
For now, the fixed rates, I know you guys have been reading the news or following the interest rates. Even though the Bank of Canada has been decreasing their interest rates, banks have been increasing their fixed rate. And what you see on the old market, if you got a mortgage a few months ago or even a few years ago, you would always get, if you were going with a variable rate, you would get a variable rate minus a discretionary rate that the bank was giving. So for example, if the prime rate was at 3% and the bank was giving you minus 65 points, your mortgage will be, you would getting prime minus a certain discount. Nowadays, the banks have changed their discretionary rates, and most banks are giving just prime only. And the reason for that is just supply and demand. In order for you to get a mortgage, they need to have enough funds available for that. Even though the Bank of Canada is decreasing the rate, that does not mean that the banks can offer that rate either. But there are news that hopefully in the next few months, the banks might decrease their fixed rates. But in terms of the variable rate, it will just stay up for now.
Gotcha. Okay. Well, thank you for touching on that as well. If customers are interested, whom should they contact for more information regarding their deferral payments and everything else related to banks?
Yes. If you have any questions, any institution that your mortgage is with, you can just log into their online banking. You can read about it and how their deferral program is working and what are their rules and regulations. But in terms of applying for this program, there is two simple methods. You can simply just walk into your branch, but as I know that most of the branches have been affected, some of them are closed and some of them are working on a shorter hours daily. If that's you don't want to walk into a branch, you can simply call to the phone channel and they'll be able to help you out.
Okay, gotcha. Well, thank you very much, Ali. We appreciate your insights into the banking and mortgage aspect of the market. We do need to move on to our next panelist, and I think we have our legal expert on hand. Thank you very much once again, Ali. If anyone has any questions, we'll include his contact information for you to reach out to him later on.
Thank you so much.
Thank you.
Thank you, Ali. We have Shahab here, who is our legal counsel from NiaLaw. Shahab, how are you doing?
Good, good. How are you?
I'm doing well. I'm sure you have gotten many questions from your clients, so we've only picked the top 4 to answer right now. As for us, we have been getting calls from clients asking if at any point, is there any way they can cancel their contract?
Well, first of all, I just wanted to thank everybody for joining us in this webinar, and looking forward to working with you guys down the road. Unfortunately, right now, there's no way of getting out of your deal per se, because at the end of the day, the purchase and sale agreement is a contract. It's a binding contract that has been signed, and you cannot. I would strongly recommend for you to try to close the deal that you have in the past, and it will for whatever unfortunate reason, especially due to COVID-19, if the deal doesn't close, it still has to go through the regular channel through the court. Nothing has changed in terms of closing, so there's unfortunately not right now.
So just to clarify, people can still close on time, am I right?
Absolutely. So basically all the banks are open, our land registry is still working. So right now all the law offices, my offices work full time. So nothing has changed because we are essential businesses at this point, and everything's working the way it was in the past. So the business is as usual.
That's good to know, because I know a lot of my clients, not just mine, but the Home Investors team's clients, they're very curious as to where they can even close or not. In terms of that, though, can they put any precautions into an agreement, such as clauses, to assist in making sure that actually happens?
Absolutely. There are a few recommended clauses that they can put into their contract. But again, given this is kind of new to everybody, I would strongly recommend them speaking with their lawyer before making the decision of adding those clauses. There are certain clauses, for example, there's a few logistical clauses in terms of being able to sign all the documents electronically, that could be added into the clause. Or also, what's been happening a lot is instead of transfer, because before what we do is we receive the keys, the lawyers would receive the keys. So these days, instead of sending the actual physical key, they can just leave it in the lockbox, and then it will just, once the deal is done, we'll just let them know that they can actually go to the lockbox and grab the key. Certain other clauses that they can potentially add to their contract is asking for extra time, especially when it comes to doing this. So, for example, they can put a clause in there saying that each party will be responsible for each party will be responsible for any damages that's caused to the as a result of non-closure, but that is usually people won't go for it. The other clause that they could actually perhaps add to the thing is they can kind of protect themselves. Let's say, for example, if you're buying and purchasing it on the same day, kind of mention it on your contract saying that since I'm buying and selling, in case let's say if I'm the buyer and my property didn't sell on time, give yourself that extra 30 or 90 days. Make sure you mention that on the contract sale agreement. But what I would say is, at the end of the day, speak with your lawyer, because it's really important whether you're selling or buying and what kind of clause you want to put to protect yourself.
Okay, thank you. I appreciate that. Lastly, though, for either buyers or sellers, if one of the parties are actually sick, is there anything they can do to save deals where there are legitimate delays, or it's more just extensions?
I would say extension. Be very, very clear with your communication and make sure you get everybody involved. Your agent get involved. I had a deal a few days ago where the agent wasn't answering the other person's call, and that would have solved a lot of problems. So I would say just be very clear. Have everything in writing. You can ask for an extension as many as you want, like as many days as you want. But again, it really depends. If you're selling, you want to make sure that you put an extra deposit to kind of protect yourself. If you're buying, You want to make sure you don't pay as much penalty or extension fee, things like that. Yeah, but you can't walk out, but you can certainly ask for an extension.
Awesome. Thank you so much, Shahab.
You're welcome.
At this point, we would like to share our opinions on the real estate market. So on behalf of the Home Investors team, I'm going to put on Ali once again. He has some figures he can go over with all of you, which hopefully will provide some clarity on what's been happening with the market. 1 second, let me just put it on. Hi, Ali. How are you doing?
Good, how are you? Thank you very much, Shahab, for that. Certainly, I know there's a lot of people concerned about their deals closing and whatnot, what they can do to protect themselves, so that certainly helped. Now, you know, everyone does want to know what's happening to the market, and they want to know, you know, how it's going to be impacted, if there's a crash or not. And really, the reality is we've only been in this for about 2 weeks that we've been in quarantine, and so there's no 100% definitive numbers yet. So it's not very clear at this point. However, we're constantly tracking the market, and even before COVID hit, you know, there was multiple offers happening for all property types, almost all across the GTA. Now, we're still noticing that there are multiple offers still happening, primarily with condos and townhomes. So the market, there's still some transactions happening. However, the vast majority of these are people that have already bought and now they need to sell, and vice versa, they've already sold and now they need to buy. And obviously these people, it's in their best interest to continue the course unless they want to, you know, remain homeless or carry 2 mortgages, which I don't think either one of those is the ideal in these times. Now, after these transactions all come to a close, do we think that it's going to be business as usual and people are going to be flooding the market? No, we don't think that, just because we're already seeing a trickle of properties coming off the market. A lot of people are afraid of contracting the virus, of spreading it further, and they want to protect their families, obviously. And so we are seeing quite a few people taking their properties off the market. And that doesn't necessarily mean that the confidence is lost in the market. It's just that these people want to protect themselves, and so they will likely relist at a later time once the pandemic is over. However, you know, we do have some numbers to share with you, which I'll go over right now, and then I'll give you ultimately our outlook. So we're going to start off with how do I minimize this? Okay, so with the average price. Now, before we get into this, I did want to say that we did choose one community to give you an example of, rather than going across the entire everything that's reported through TREB, just because it's too vast, there's too many communities, and there's too much information to cover. So to give you some clear, concise numbers as to what's happening in a community, we picked one as an example. Now, we did pick Richmond Hill because there is a fair representative of different property types available in Richmond Hill, between condos, towns, semis, detached, and as well as luxury properties. And what we are going to be doing is covering it over a 2-week period. Just because COVID-19, we've been in quarantine for 2 weeks. The impact has only been for about 2 weeks, and so we're comparing it over 2-week periods. So at the end of March, as we are right now, to the height of the real estate market in 2020, which is the end of February, the last 2 weeks. And then we also want to give you year-over-year review, and so we're comparing it to the end of March in 2019. So as we can tell here, we're going to get right into it. You can see the different color codes, and this is for March 2019, February 2020, March 2020. And so we detached semis, towns, and condos. As you can tell, just based on the graph, you can see that detached properties have come down a little bit in price. They're on par with 2019 prices, and the reason why February it was the hottest time of the year for 2020, and we actually saw many multiple offers even for detached properties. Actually, our team, we sold 2 properties in Richmond Hill. We sold them for over asking price, and so that's what really caused a surge in prices February 2020. Now, with semi-detached properties, you can see that there's a bit of a drop from month to month. However, we're still over that of last year, 2019. I think the numbers would be a little bit higher if there were more transactions happening. We actually saw there was only 2 properties that sold in Richmond Hill during this time period for the past 2 weeks. Now, if you go over to towns and condos, it's a slightly different story. Townhomes are still doing quite strong. They are still, in many cases, selling for over asking with multiple offers. And I think people are just trying to get into a home at this point. And so the prices are higher than February of 2020, as well as quite a bit higher than March of 2019. And then with condos, once again, we do have multiple offers. The prices have dipped a little bit since last month, but certainly still quite a bit ahead from March of 2019. Now, to put all of this into perspective, we do need to see the number of properties that sold. So as just going back to the average prices here, as you can tell here, the prices have held pretty steady. There isn't a crash that's happened, nor can we at this point predict that a crash will happen in the next couple of weeks. But ultimately, we'll have to wait and see. So what's going on here? Ignore this. So to put the sold numbers into perspective, we need to consider what's sold and what's terminated. And the reason why we want to look at this is to see how many properties have come off the market, and particularly for what reason. Now, if we go back to March 2019 for detached properties, you can see there's 84 properties that have come off the market and only 48 sold in that 2-week period. Now, times were a bit more difficult. The market wasn't as fluid. It was a slower market, and so properties weren't moving as fast. And if we come to February 2020, you can see that the numbers have almost reversed. 76 properties that sold, 49 have come off the market. And then once again, March 2020, the numbers look like they're back in March of 2019. And that's because, once again, we are noticing a lot of people have terminated and suspended their listings after a few days, after a week. And so they are really concerned about contracting the virus, spreading it. And it's not so much that the market is slow. We were going to the spring market, everybody was getting ready, the confidence was high. It's just that people are concerned about the virus, and with the government constantly telling everyone to stay at home, only conduct business when it's absolutely necessary. Obviously, it's a good sign that people are listening and they are self-isolating. Now for semis, the numbers are just too small for us to make much of an assessment as to what's happening there. Only 2 properties sold. February, 8 properties sold, and so that's why you could see that differential in prices. It was a bit sharp. And then with towns and condos, you can see that the transactions are for the month of March, they have outpaced even February as well as March of 2019. But at the same time, so have the number of terminations, suspensions, and expirations in property listings. So they have, they're still selling, the transactions are happening, but people are still concerned, and so they're, the number of suspensions and terminations are coming down as well. So with all of that said, what are our predictions? The reality is that it is still too soon to tell. We're only 2 weeks in this. Supply is down, but really so are buyers, and so things are somewhat equal as they are right now. We really don't know when COVID-19 is going to be behind us or how long it's going to be with us. And what we've been able to do is we've identified the main 2 types of buyers right now. Those that are there's about, well, let me continue my thought. Those impacted by COVID-19 that are expecting or facing wage losses or might be even expecting to be laid off, we really think that you should stay put. Do not purchase. You need to save your money for the rainy days that we're in right now, and stay put. And then there's others that are not affected by COVID-19. They're continuing to work. They're continuing to earn their income. They have enough savings to get them through COVID-19, and they have a large enough down payment to go ahead and purchase. And then there's also investors that want to take advantage of this opportunity right now to try and nab a deal. Now, even to these individuals, although you're not a great risk to be buying right now, we do still recommend that you maybe wait it out for another 2 to 3 weeks and see what happens in the market. Because ultimately, if COVID-19 sticks around for longer than we hope it does, then we do certainly think that the market will continue to go down and prices will drop, and then you'll have a better opportunity to get a better deal. However, if there is a vaccine, because the government healthcare practitioners are working around the clock to contain this, to treat people, and to look for vaccine. If a vaccine does come around in a week or two, then we think that the market will naturally just rebound. The confidence and optimism in the market is not lost, it's just people are scared. So if a vaccine does come around, we do think the market will rebound, and then really you haven't really lost much at all. We don't think there is a big enough reduction in price for you to go and get a deal right now. We think we should stay put for at least 2 to 3 weeks. And ultimately, we do think cash is king, and during times of uncertainty, it's better to keep the cash in your pocket and see what happens, and then play it by ear as time goes on. So we do hope that based on the information we've provided and what's happening so far, you had some good information to take away from this. And that is essentially our outlook at this point in time on behalf of the Home Investors team. Thank you for your time and listening. Arianna, is there anything else that you wanted to add to that?
Thank you, Ali, so much for sharing. I was hoping to do a Q&A, but we didn't expect this many attendants. So instead of rushing, to be fair with everyone, we will email out our contact information, and we would really appreciate it that if you can kindly email us all the questions that you may have. Also, if you want the numbers in your specific neighborhood, we would gladly provide that. One of us will contact you either as a 15-minute appointment or over the phone or via email, whichever works for all of you. Once again, thank you so much for everyone for participating in our webinar today. Special thanks to Ali Rashid, Ali Mossadegh, and Shahab Nazarinia. Lastly, thank you to Brian and Miran for organizing this. Hopefully we have provided some useful information to all of you. Thank you, and please stay safe, everyone. Have a good day.
Thank you, everyone.
Thank you.